Not sharing.
Not yet.
Now I see message here. Now I'm using Telegram.
Who you say just like same voice?
7 to 8.
8 a.m. morning time.
Yes.
And the voice of the Lord talk say I don't promise now. That's why I told Mr. Promise.
No, yeah, that's it. I use it.
Hello, Grace Maid. Hello everyone, welcome to today's live market forecast and chart breakdown. I hope you guys are good. Today is Friday and time is 2 p.m. So we are actually just entering London session 1:30 this morning. Saturday, 1:30 2 o'clock. I will be active. Has anyone taken a trade yet today? All right. So today we're going to be looking at some pairs to see what's happening. Now, right now, we see what's happening on gold. Gold is actually springing up very high. Same thing with Bitcoin. Bitcoin has bought a lot. Yesterday, we had a very nice outlook on Bitcoin, my series in class, and it has actually spearheaded bursting through lots and lots of highs. Bitcoin has got to right up to 118K. So if you took a buy on Bitcoin yesterday at about 5 p.m., you should have made a fortune for yourself. Yeah, gold is actually pushing a major high in the market. UJ2 is actually about to buy. Starts about to push up because it's a chart pattern on USJPY that is about to burst up. They have something looking like a falling wedge on USJPY. So these sessions are most of the time, these sessions are just to show you guys or maybe talk with you to understand how to see the market, how to actually analyze the market. Not how to analyze it because you really not analyze well. Sometimes, especially when you're new, you want to actually see or get to understand how traders do when analyzing. More about the mindset or more about what emotional strength do you put in while you're looking at the market. Do you get? That's why we have this session. So starting off, I'd like to share my screen and I'll show you what I'm seeing from here as well. Okay, I'm going to show you this trading view. Let's see my screen. Okay, great. So I think it's visible. Please, if you can see my screen, kindly indicate in the comment section on those drop the one if my screen is visible. So I continue from here. And I'm sure more people as well, yeah? Can anybody see my screen? Yes, I can see. Okay, great. Thank you, Mr. J. Thank you. So I'm just going to get started now. I just opened this and I'm seeing some structure on GBP USD on 15 minutes. Let's take a look at the 1 hour. On the 1 hour, we are seeing the market has been bullish, but right now it's actually creating structures to the downside, heading somewhere. Now, where is it headed? Now, analyzing the market, you need to look at the higher time frame market direction. When I talk about the market direction, I want to look at the overall directional bias of the higher time frame. Directional bias is bullish. If you look at what's happening right now, market is actually coming down to VY. Now, these 4 hours, but goes to the daily time frame. On the daily time frame, we can still see the market very bullish. All right, on GBP this is a very bullish market because we can have see a daily or weekly trend line that's doing what that's actually showing us market direction. Right now, this is what we have in front of us. Here we have this market is bullish, but it's coming down to a level. What level is that? Now on the daily time frame, we see this last bearish candle here, or this is where a lot of others see this area like this. Now the market is right now at this zone. What would happen? Would actually see the market reversing if it gets, let's say, 50% of this candle, or coming right back down to this support, or this resistance that's turning support. This was the previous resistance that becomes support. The market broke out of this and it has come to retest it. We had this market broke out, came here, it has taken out this, it had to come back here to do what? To move back upward. But then we have imbalances on this stretch. If you see very well, there's an imbalance here, and this as well have imbalances when it comes down to smaller time frame. So this market is surely coming down to do what? To fill all of the orders that were left unmitigated on these candles or these bullish impulsive moves. This is what we call institutional candles. Very big candles are called institutional. Now we have the market coming down here. Probably you're going to get here, we're going to get to the body close of this candle, open here, and then start pushing back to the outside. But if this level does not hold GU, it might do what? Break and come back down, probably direct to the trend line, or this other support down here before it continues going back up. So now, from the daily time frame, we've already seen what's happening. Let's go down to the 4 hours to see it clearly. Now, on the 4 hours, what do we see again? Now, let me just take this off for a second. Put it down here. On the 4 hours, the imbalance I was talking about, we can still see it here on the 4 hours. And what I'm really going to say is because we have another big imbalance here, and we have this candle will now become the next point of interest. This candle here. Why is the last candle before the bullish impulse move? Okay, now why am I looking at this candle? I'm looking at this candle because after this there was a very long, do you see that? A very long push to the upside. So it shows that this area was where previous orders were carried out from this last candle, and immediately this candle closed down here, a lot of money was injected into the market, making the market push up this much. Now, before then, we had a level here that the market just passed violated. Now, traders who are trading, let's say, supply and demand, call this a previous demand zone that was not respected, a previous supply zone rather, or we call it a previous, let's say, another block, just trading IC, with another block that was not respected. So now, because the market broke it, we are not going to now look at it now as a level, or call it a breakout block, something like this. So now, looking again at this point, looking at the chart pattern, we'll say this was some sort of a double bottom down here. The market was a double bottom and then broke this high. Now, since it broke this double bottom, it has not been retested yet. So the market has come down now to retest this double bottom. So in either ways, whatever strategy you're trading, there is an opportunity to take a trade here on GU. So we feel like, okay, now the market might start to buy from this level or might push down a little bit into this zone before buying from. But either ways, we will not start to see market reversing from here to take a trade. Now, this is a 4 hour time frame. And how do we know the structure of this market is bullish, but now might change? If I take out the toe here, we see the market did what here. There was a little internal market structure shift here, or a change in character from this level. Then we had a break of structure down here. And then we had a second break. This was a break here, and a second break somewhere here. So now we want to see the market come to this level and push back up. Now, after this break, the last level we have here that we'll actually call the new thing is once the market take out this high, for us to know we're going back up bullish. Okay, now for us to know we're going back bullish, we want to see the market leave from here and come and take out this high back, closing the body above here. If it does that, then we want to now start to buy this market back from somewhere around here. Buy it back like this. Does that make sense? So in the meantime, our only job to wait now is to see how the market reacts from this level, and if it starts buying back up, will it close above this level? Because if you look at basic market structure, what do we have? We've got some sort of a high here, a low, right? A lower high, so it's a lower low, a lower high, and this is a new lower low created. If the market continues going to the downtrend, we'll have the market pull back into maybe 50% of this zone, like it does all the time. Like it does. It fell from here, pulled back 50% or more, and it dropped to this level. It came back here, pulled back up 50%, and it dropped. So if you want to continue going down, we expect the market to pull out 50% into this level, maybe somewhere into this area, and do what? And continue dropping down to create a new lower low. But if that doesn't happen, we want to see the market now because what? It violates 50% and mitigates 100% of this level, closing above this lesson higher. Then we'll say we're going back into a bullish structure. If that occurs now, we'll simply want to do what? Want to see how the market now comes back now to respect 50% of this level and do what? And then push back to the upside. Then we'll say the market has done what? Has changed structure. If you look at what has just happened now, we'll now call this what an inverse head and shoulder, something like this. All right, head and to push back upward. Now, this is what we call market confirmation. Now, once the market reverse from this level, as a trader, you need to anticipate what could be the next possible move. You're not looking to predict what the market is going to do next. You want to look at what the market does, so now you do what you follow the market. I don't know if that makes sense. We are traders, and traders, their main objective is to follow what the market is saying and react on what the market shows you, not predict. Because if you're predicting, you might be wrong, and if you're wrong, you might be discouraged trade. So at this point, where we are sitting right now, we are seeing the market on a key level. And this was a previous double bottom. The market has come out to retest the neckline. If you're trading ICT, you see the market has broken through another block. So this becomes a breakout block. Now, if the market succeeds, let me take this out. If the market succeeds in breaking past this level, assuming the market breaks past this level like this, and then comes back in here, we'll now call this a what? A reclaimed block, because now this was a breakout block. The market failed to respect it, becomes what? A reclaimed block. But now at this point, that's what we're looking at. What now see how do we get entries from here? We'll now continue to push back to a lower time frame, like the 1 hour. On the 1 hour, what do we have? On the 1 hour, like you can see here very plainly, the market has respected or has mitigated 50% of the candle that we called a breakout block before, or the neckline of this region. Is that right? This was the last candle that we had here. Why am I taking up just this candle? Because after this last candle here, we had a small imbalance here and the market pushed down from this level. On coming back, the market was supposed to get here and respect this and fall, but it broke past it. Now look at what's happening here now. The market has come back and has touched just 50% of the level and is rejecting. So we're assuming the market will start buying back from this level here. And that's what we're seeing. You wanna have a stop loss just maybe something like this, 20 pips or something decent. Okay, great. This is the descent level where we have the break, something like this. So we want to see now how the market does what? Buys back right up to this level. If it breaks this level and closes above, then we'll start looking for a chance now to continue buying GU back to the upside. Just to make sure that we are on the right foot, because what's happening on DXY. DXY and GU are inversely related. So now if DXY is looking bullish like this, where will DXY possibly start selling from? On the 1 hour time frame, we have DXY is actually a downtrend as well, like you see. DXY is on a downtrend, while GBP USD is on an uptrend. You see the difference? GU is on an uptrend. Oops. GU is on an uptrend. Do you see? And DXY on a downtrend. Now, DXY now is actually showing us that since it's on a downtrend, it might actually pull back up to a particular level and continue falling. What particular level could you pull back from? Let's look at the 4 hours to see if there's any level here that it could actually cause this fall. Now, looking at this, we have this gap that the market is filling. So it could get up to this level here. This is some sort of a resistance level at this level, right? Now, at this resistance level again, what to be more specific or more precise at this level, we've got some sort of this area here. That should be good price. So either ways, we are seeing DXY coming into this level and then rejecting to fall from here. So now this is a good sign because if it comes into this zone, I'll expect this to bound in here and then continue and drop back, push back to the downside. The same thing with GU. GU has arrived here first and is doing what? It's pushing back upward. Now this is the next area on the chart where we feel like, okay, the market doesn't respect this. It will come back right down here to actually buy from this level. But now, we're not expect to have the stop loss on GU to be this large, 142 pips. No, it's not a swing trade. This is just a day trade, so we don't have to have a big stop like this. So, in case the market fails to buy from this level, let us stop out with a 20 pip stop loss. And what happens? We now wait for the market to come back down here to take a new buy. Let's put it somewhere here, and this probably here. I don't know if there's any questions. Let me go back to the chat. Let's see. If everybody is following, please, if you have a question, please, you would want to let me know. You see something, we have 7 of us here. Anything you want to ask, please ask in the comment. I'm going to actually verify you. All right, back to the chart. So this is what we are seeing here. So if we're looking at GU, I think we should be buying GBP USD. A rejection. As it's based down your trading. What is the next possible place where the market might reject from? So it might give us something like this, a W, and then break. Always anticipate a rejection so that when the rejection occurs, you're not surprised. Does that make sense? I think we're going to see the same, we'll see the same thing like this on Euro USD. Okay, wonder. On Euro USD, would have something similar like this. Okay, great. Yeah, perfect. This was perfect, yeah. Okay, this is nice. On Euro USD, I and my students yesterday had this zone to look out for. And market was loitering around this area like it was going to respect it, but then we knew it was going to break it. So there is this zone down here as well. I'm giving you these two charts because Euro USD and GBP USD are positively related. So whatever is happening on GU will most likely happen on Euro USD as well. Most of the times it fell, But then instead wait to see where the market comes to and you take it back. But then it doesn't mean if you see an opportunity for yourself, you wouldn't want to take it. Okay, you should actually be subjective to your analysis and then respect whatever you see in the market. Now, this is a very clean trend line. The market should actually buy up to this level, like this, and do what? And probably sell back here to this one. We have imbalances on this and this one, like you can see right here. The market feels this imbalance and tap on this more push to the upside, or right up to, or maybe even this support line here. And then before it breaks solar level, so something like this, and then it breaks. And then it takes out this high. Now, most of this will happen next week. So, like I like to call Friday's chart breakdown as market forecasts for next week. Like I would always say, Fridays are days when I don't trade a lot because of the market events. Most Fridays, the market is turning to close because it's end of the week. So a lot of times, the market is actually being very, very choppy or very, very, very steady. So I don't want to maybe put in very, very much orders or taking off trades on Friday. I'll just look at it with the mindset looking at what happened this week and what would next week possibly look like. So back to GBP USD. This is EU. Temperature beside here. Good. This is EU and this is GU right here. So GU is giving us this level. It's a very good zone here on GU because we have seen this level. It actually coincides as well on the 1 hour time frame. And we actually think it's going to buy and push up maybe to this high. Is that all right? So that's what we have from GU. But if this high is taken out, then we'll start buying. But if the high is not taken out, market will get here, market will get right up to this level, and probably still fall back right down to this level. So either ways, that's what is happening in the market because we have this level that's acting as a resistance level that's here. Don't want to ignore that. But we're actually seeing a possibility of the market pushing to the upside. But before it does that, I want to see the market give us what? A kind of double bottom down here to enter. So if you're not buying GU yet, you might want to sit on your hands first to see if the market gives you something like a top, then you want to take the buy. So this bottom should be like this, something like this. You get up here probably and come back to maybe a particular level, but it doesn't take out this low, and then we'll get it as confirmation to buy this market to the upside because if it breaks past this level, then it's good. So that's that with GU, and that's what we have for now. Now let's take a look at what's happening on gold. On XAUSD, we're having very, 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 very bullish structures, even though it's looking kind of bearish in a higher time frame, but we are bullish, right? Gold has been bullish for a very long time, and if you look at this, we're still right up the air. Great. So now, looking at what we have here on gold, we are having some sort of a break of this level. Now, this we can actually call something like this a falling wedge because the market left from this low, plunged up here, and it has fallen, giving us this structure. So most of the times when the market does this, it's going to pull back to the upside and break, giving us the same distance that it gave us from down here to this level, like this. So this is what we're having now on Euro, on XAUSD. So when we're expecting the market to come back up into this zone, maybe why? Because we have a small gap here and we have this last candle here. That's what we have. So all of this is going to serve as liquidity for the market to do what? Fall into this area. But then for you to buy from here and hold up to this level is a long way to go. All right, this is somehow going to be like a swing trade, but we expect this move probably next week. But before that, you want to expect market to tap into this high first here and play with you a little bit. So it's not going to be a smooth run right up to that level. You might tap here and play a little bit before it breaks up. This is what we have on XAUSD. Nothing very clear. Let's look at the 1 hour time frame to see if we have any opportunities to continue this buy. Now, this is what just happened here. My colleague just took this buy and he actually banked in 130 pips. But now, after this, where will the market come back to before pushing up? Because now, you must always have this mindset. Market is actually buying right now. Will there be a chance where it comes back, it retraces? If it retraces a little bit, you want now to take that retracement as another possible entry. All right. Now, what's the possibility of this buy? Because the market broke out of this channel with what? An impulsive candle, closed above and came back to retest. So this was a good entry. Now it's going back up there. Is there anything like an imbalance here that can attract the market back? No. 30 minutes, no. 15 minutes, what is there? On 15 minutes, not really. But then we can have this zone on 15 minutes. So if you're looking to enter, say US again to continue the buy, you want to see this as a possible zone. Maybe this as an area of increased market will come back to collect this low here. And maybe look to buy into this from this region. Something like this. So if you want to take a trade now, I think it's looking very nice on XAUSD. Something like that. Now, the market will come back run up to 50% of that candle. 50% of that candle, if we're looking, taking off from this low to this high, this is a fifth tool. 50% is where liquidity is actually seated at here. That's where liquidity is 50%. Market at about 50%. That means that it has created liquidity to come back where? To come back into this area. So this is great. So we want to anticipate the market to come back maybe somewhere into this region to buy from here. And this is going to be a very nice trade, not so much, a very small stop loss. Now this is what we call a short-term buy on XAUSD. So if market come back here again, now look to either you take your entry at this high if you're conservative, if you're aggressive, or you wait for it to pull back around 50% somewhere here if you are conservative. A conservative trader wants to be sure that the market is going to come down to the cheapest price possible before buying. He's not in a hurry to take his trade entries. He prefers his hands and save his money than take a risk and lose money. So this is what I say on XAUSD, because the market is actually giving me very, very bullish tendencies here. I don't see any sell happening here for now. All right. So this will have on gold. So if you want to look at this as a trade, this is an opportunity to take a trade. The market breaks this. Why am I taking this trade? Because I've seen, let's look at 5 minutes to be a little bit clearer. We have seen an imbalance at this level, and the market might come right down to this low here to give you an entry. Is that right? Coming back to do what? Fill all of this imbalance. To take a step into this. So you want to maybe keep this as a. Remember that proper risk management is of utmost important. You don't want to lose risk money you cannot afford to lose. This is about a 50 pip stop loss. Let's put it on 50 on gold, about a 50 pip SL. 50 pip SL and a 100 pips tip. It's 1:2. A very decent trade. So wait for this to happen, and then if you're looking at the market, you can now enter the market gets to this area. What's the price? 3,334.44. Entry is 3,000. Let me push it to this level. 3,330. 3,000. 3,347.44. That's the entry and the SL. And the SL price here is going to be 50 pips, 3,342, 3,342.29. All right, this is the entry and this is the SL for this trade. When you're trading, you don't want to be in a hurry to feel like market has gone and left me. The market will always come back to get liquidity when it wants to. So you want to get it as entry and SL, these two prices. Are you guys still with me? Let me take a look. Okay. Hi, Benita. And hi, Basson. She says, wow. Yeah, wow. This is what we see on gold for now. And we're looking to take an entry here. Market is coming back down. Market will still come back into this level. Market will still come back on gold and tap here and reject and come up if you're coming down here. Either ways, we are bullish. You get either ways we are bullish. So that's what you look out for. That's that for gold. If you have a question, please drop it in the comment section. I'm going to look at it. Now let's take a look at Bitcoin. Bitcoin has given me a lot of joy yesterday, and it keeps giving joy. But thing is, my entry was just here. The day before yesterday, I caught the first buy. This first buy, I caught the market we bought from these lows. So I banked in all of this yesterday. The day before, rather, all of this move. And I had to catch this yesterday with the class. I caught it on my own, and then I caught this small move, this one inside here. This one. That's no, not this one. This one here. Let me hide this for a second. Okay, this one. About 61 pip and 29, 30 pip stop loss with my French training class. I was taking at about 5 p.m., about 4 or 5 p.m. my French training yesterday, and they were so happy that they had this buy on gold. It was actually their first trading class because we just entered technical analysis and we're looking at how to actually use orders on trading on 95. So it was a very, very good class because they were happy because their first trades, we took a class together, they made money, it was good. So now, with this, my own trade ended just with this 132 pips on Bitcoin. But then guess what? He bought and bought and bought and bought. Right now, on the 5 minute time frame of 15 minutes, like we see, he has created a head and shoulder pattern. What does the head and shoulder pattern stand for? It stands for reversals, right? If you're my student or student on the FN-FOREX Academy, you know that when you see a head and shoulder pattern like this, it possibly means that the market wants to give us what? A short-term sell. Probably the market wants to sell down to this region here. Now, what do we see here? At this level, we see sort of support at this zone on 15 minutes. Let's look at 1 hour. Okay, 1 hour we have something like this. Same thing. The market has pushed out of this area and is coming back to retest it. This is the last high that was created. The market might actually fall back into this region and then continue buying back up, or probably continue selling back to the downside. What does the higher time frame say? If you go to the higher time frame, we'll just see that Bitcoin is very bullish and pushing upward. Let's go to the daily time frame. We'll just see very long bullish candle. Do you see that? This is what's happening. So if we scale down a little bit to the 4 hours, we'll see a little bit the presence of bears. Bears are coming in now. Sellers are stepping in. But they might sell right into this zone. All right, let me take it off a second. They might sell back into this zone because on the 1 hour time frame, we are seeing that this is the possibility or a level, a previous resistance that might become support. So we might see the market like on 1 hour. Do what? He has created some sort of a head and shoulder on the 30-minute time frame that we can see right here, and this is a neckline. So we want to see if Bitcoin breaks through this neckline of 15 minutes. Zoom in out a little bit. Yeah, this is the head and shoulder, right? We have a left shoulder, the head, the neckline, and this is the right shoulder. So now, is the market going to close below this level with the body? That's the other question of the day. So we want to see how Bitcoin reacts to this area. All right, is it going to break through this with the body? We see that the previous candle that is showing here actually pushed down and closed with a wick, or has not closed yet. We have pushed down and has left a wick, but it has not closed yet. We have 4 minutes for this candle to close. If you close it just like this with a wick, that means that there's a possibility that no, you don't have to sell yet. Because wick stands for what? Rejections or destruction, and body stands for what? Storytelling or continuation. So at this juncture, we have BTC giving us some sort of a total scenario. Now, this could mean a possible reversal, a possible pushback to the upside. When I talk of possible, I just mean that the market might not want to sell yet. It might just want to do what? Push back up like this. All right. So because of this, we might anticipate the market doing what? Maybe cars come back down here, sell out the liquidity that was here and wants to continue buying back up. But before it buys back, I'm very confident, or I'm so convinced that we should at least come back here, feeling what? All of the imbalances on this row. That is going to show you more imbalance. Perfect. This is a very big imbalance candle. that the market might do what I want to actually come back to. So now to refine this area very well, I want to look at this candle like this. But let's look at 45 minutes to be more precise. Good. 45 minutes will give us something like this candle or this level. I think 30 minutes was clearer. Okay, on 30, you see this entire zone being an area. Now, this market can close like in 45 minutes. We're going to use this as an area of liquidity that the market should come back to. Should take out and then maybe buy back. So for BTC, I see more buyers on Bitcoin. Probably the market should maybe pull back into this zone or 50% of the zone and do what? And continue pushing upwards. Remember that this zone took also as well as support. So we maybe anticipate buying BTC if it comes back down here. Now we'll have our stop losses just a little bit below this week's here, or the 60 pip. I like round figures, so I'm thinking for round figures. 61 available in 65. So now something like this. This is about 190 pip. So this is what I see on Bitcoin. If this happens, we want to look to buy the market back to the upside. Say push it because we are still bullish. But now a head and shoulder shows reversals. But now if we are seeing this head and shoulder maybe less on the 1 hour or the 4 hours time frame, I would anticipate the market coming back right down to where it started its buy from. Maybe right down to this level. Maybe right down to all of this. Take it coming back right down to this area. Okay. But then the head and shoulder is small. It might not maybe go for long. But either ways, we have this level that is the market should respect. So for now, I see the market coming back into this level to continue buying. If it succeeds in breaking this level, it might come back here, hitting the liquidity up to this point, or this row as well. There was a lot of liquidity here that the market level must be filled. But the reason Bitcoin buying like this will not just come back this zone. All right, so we might maybe see a psychological level of 120,000. That's this here. That Bitcoin might reach before it might even do anything. So this is psychological level. Let's just put it coordinates 120K. $120,000. Yeah, perfect. That's 120,000 critical level. So this could be where Bitcoin is headed. 120K. Either ways, 300 pips. We have 300 pips from there. So if it comes to 120K, then we might now start seeing reversals because 120,000 is a psychological number, or it's a level that the market would most likely want to respect because it's a whole round number. Yeah, it happens in Forex as well. So that's what we have for BTC. And let me look at the comments. Let's see what you have to say. We are 30 minutes gone. Thank you, sir. You're welcome. It's random. I took the trade already on gold. Great. On gold, what do you have on gold again? Okay, on gold, we want to see gold come back to this level, right? Good. Now, if you took a trade on gold here, you might just continue holding. That's if you are really in on gold before we had this spike, you might just continue holding because the market is still very, very, very bullish. All right, so we might maybe still go taking out this highs today, highs of 365. If it takes it out, then these other highs now would be actually also so risky. 339. 3,393. This highs as well would be risky. That's just how we analyze the market. You just look at zones where the market is at. What is the next possible place where the market is most likely to head to? You don't predict there's going to go there. You have to look at the reasons why price might get there, or what would attract price to the level. But we've analyzed 4 pairs so far: Euro USD, GBP USD. Yeah, G is actually buying up very well. We've analyzed USJPY, and we've analyzed Bitcoin and gold. So let me have your questions. Okay, now that's coming down the body. Like I said, it's coming down the body. Let's look at 15 minutes. 15 minutes close. Break. 15 minutes close with the body. Do you understand? Do you see that? It closed with the body, so that's a good sign. The body closed below that low. We are afraid it's not going to close, but if a wick closes below a low, then it can just liquidity. If it closes the body, then it's actually coming down. That's what you should have. If you learn anything from today is that you want to look at candlesticks and your wicks. If a candlestick closes below a particular level with the body, it possibly means that there is a lot of selling pressure that's pushing down the market, and it should actually come back to maybe your quarterly trend. But if it closes with a week, then that could be just liquidity. So we have a head and shoulder on BTC. Once the market comes down right up to this low, to continue buying the market. I'm taking questions now. Okay. So please, what are other blocks? Please, can you explain? Randolph, it's Randolph. I took the trade already ago. Tampa Joker, that name doesn't really Randolph. It doesn't at all. But another block is these are what they call PD arrays, right? PD arrays, ICT concepts, premium and discount arrays, and another block is one of them. Another block is simply a level. Let me go back to the chart and talk about that. Now, I'm doing this because a live class like this, I'm going to have people from all around the world who are trading different strategies, okay? But if you're just a student of FN-FOREX, we treat just pure price action. Since you asked and you asked nicely, I'm going to share my screen right now for you. What was that? So, window, yeah. Okay, so another block is a level that the market should respect. So another block is the last candle before an important bullish move. Okay, now on Bitcoin, this is what we call another block. This is an impulsive bullish move, very impulsive, long bullish, fast candle. Now another block is a level where these orders were imputed before this move. So when the last candle before this long candle was created is this last one here. So it's another block. It could be bearish, it could be bullish. Some people say it's the last bearish candle, some people say it's the last bullish candle, but it's the last candle basically before the positive move. So if the last candle was bearish, it's going to be a bearish candle. If it was bullish, it's going to be a bullish candle. But now, what are the characteristics of another block? Another block should have an imbalance, or what I see traders call a fair value gap. Okay, so below, after this, all of this, we call this candle an imbalance, like this. Or what messengers call a fair value, an FVG, like that. Now, what's an imbalance on FVG? An imbalance is a long impulsive bullish candle or bearish candle that has no candle in front or behind it. There is no wick in front or behind. So this candle is isolated, it's on its own, there is nobody in front or behind. So this is as an imbalance. Now the last candle that tried to even come to fill this candle did not come back to 50%. So we see the gap is still unmitigated. Now 50% of this gap is going to be something like this. Of this candle, we'll say this is 50% of the body of the candle. This is it here. Alright. Now I caught this by like this one here to the wire, because when I looked at 1 hour, I saw that this candle was a very important candle as well. This last candle too, this is what we call an order block, because orders were filled on this last candle that created this important candle here. So this is where money was injected and then it appeared or created this. Now I took this buy on Bitcoin yesterday because I looked at 50% of this candle and it saw what happened to be here. All right. Now, guess what? This is 50% of this candle. So this is what they call consequential encroachment in trading, big tech, right? But now, 50% is this level. Now, the market just bought up and came back to retest this 50%, but that's not enough. I don't take an immediate retest as a retest. It's not enough. I want the market either give me an A-shaped retest, something like this, and I know that it's traded structure is going to break out of this level, or a U-shaped retest for a bearish scenario, or a U-shaped retest, or a U-shaped retest like this for a bearish scenario, what I want to sell. So now, since I saw this area now as 50% of that bullish candle, I now just created or drew in this my tool here to wait for the market to come back to this area of 50%. And guess what? It came back here yesterday and tapped at this level at exactly 2 p.m. on the 10th of July. That's when I triggered my entry and I had this very sweet sexy buy. Now, an imbalance, like you're asking, is just what? A candle that has no candle in front or behind. Now, 50% of this candle has been mitigated. That means that there's another 50% that has been left unmitigated. Now, for me to trade this, I would just want to look at this candle now, look at what happened before this candle. Is what we call another block. I will now want to see the market do what? Whatever it has gone to, if the market ever comes back down and falls into this zone, I would now want to buy because these levels now are areas of liquidity. Why? Because people bought before here, their stories are below this level. And again, this 50 unmitigated gap here also has a lot of other that to be filled. So the market comes back here, you should do what? You should hit here and push it outside. So that's what we call an order block and an imbalance with favor legal. I've answered the question, Mr. Tampa.
Online.
Yeah, online, sir. Please, your screen is not showing. My screen is showing. I can see my screen from your own screen. Can anybody see my screen, please? Someone is complaining my screen is not showing. Can you guys see my screen? Can you guys still hear me? Can you see my screen, Mr. Ronald? Okay, great. Was that understood? All right, we've looked at a couple of pairs and that is that. So for what is worth, we are looking to see the market come to any of those zones for us to buy on. So keep your eyes on XAUSD, keep your eyes on Bitcoin, and possibly GBP USD, and possibly GU. Now remember that you must not take a trade if the market is not favorable to your order. You must not take a trade if you're not psychologically in the right moment to trade. You must not take a trade if it's not your trading day. You must not take a trade if it's not your trading pair. So analyze the pair here, but that's not a pair you trade. So you might not want to take that trade if that's not the pair. All right, you don't trade that pair. So like I said, we come here every day, analyze the chart just to show you much about how the market should be analyzed or how traders should think or reason. So make sure once again that before you're actually looking at the market or analyzing the market, you want to look at or take a look at fundamentals. So with that, we'll just take a look at fundamentals for next week. What should we expect in the market next week? So 1 second. I'll stop sharing this. Okay, so let's look at Forex Factory. Now, Forex Factory today, we are looking to see this on Forex Factory. We have GBP and we have CAD. This is happening today. At 7 a.m. we had the news on GBP USD. We had the gross domestic product, GDP, and we had a news on Canadian dollar employment change and unemployment. All of those are out. So now looking at next week. Next week we have on Monday nothing serious. We have on news on the Chinese one at 3 a.m. in the morning, and we have at 20 a.m. we have another news on Euro, German, economic sentiment. Now that's a medium impact. But then on Tuesday at 1:30 a.m., 1:30 p.m. rather, we have Canadian CPI and we have CPI for USD on Tuesday. So Tuesday is going to be a bloody day because we have two fundamentals on Canadian CPI and CPI for United States dollar. So CPI is on Tuesday. You want to be very careful how you trade next week's Tuesday. And at 9 p.m. in the evening, we have Bank of England. Governor Bailey speaks, no data. On Wednesday next week, we have CPI for GDP at 7 a.m. It's going to be flowing blood. And on 1:30 Wednesday, still we have the core PPI, that's the core price index on USA. On Thursday 17, 2 a.m. we have employment change and unemployment rates. That's on Thursday. 7 a.m. we have average earnings, that's on the Great British Pound, but both of them are medium impact. But at 1:30 on Thursday, we have core retail sales, unemployment claims for USA, and 11:30 p.m. we have FOMC, but that's medium. I don't trade medium, so why did I leave it off? Okay. Now you want to actually put your calendar like this as well, so that you are just informed with high impact news. All right. So Friday next week is not actually fundamental. So next week be wary of Tuesdays, Wednesday, and Thursdays. Trading end of this day, you should be very, very careful. So make sure that before every time you're trading, you actually look at the fundamentals and you're 100% sure that whatever news coming out at whatever time you're ready to be part of that. All right. So that's that for today, and we're going to end the live chat breakdown now. The price has come back into entry on GBP USD, USD nothing yet, and BTC nothing yet. Okay, so with that, thank you guys for being on the live. I think it was a nice one. I'll see you guys next week, Friday. I'm about to start the French class. So I have no more questions. There's still 5 of you here. Is everything good? Okay. Goodbye, everyone. Have a good weekend, and make sure not to blow your account before Monday. All right. Be careful. Bye bye.